The SPY right here looks like it doesn't exactly know what it wants to do. Does it want to go up and give us some kind of rally going into Christmas, or does the Grinch want to come along and steal that away from us? So we're going to pay attention to some technical analysis for the SPY, Qs, Apple, Tesla, Amazon, and Nvidia today. I'm a little bit sick, so I might keep it a little brief, but I think there's going to be some good info ahead. SPY, we were overall talking about how this divergence here was invalidated. So if we do cross over, this could just be some kind of pullback to then head higher into January, which is what I've been talking about. Now, if some bad things happen on the weekly scale, if we keep going down for a couple weeks here or 3 weeks, we can actually see that weekly rollover, see that divergence play out to the downside. So 2 videos ago, if you want to look at those weekly charts, we actually put out a video on Saturday if you want to go back and click on that video. But for now, we're looking at these ranges, right? We're looking at these ranges. This is going to be very important as we look at Amazon today. But we can notice we're getting a green day. We're starting to gap up, and we seem like we're just going to keep gapping back and forth until a decision is made. Overall, the SPY is still at those overbought readings. We could see it break out of this wedge that it's in right now. We actually could see that head pretty low. We could see that come all the way down to the monthly expected move for December. And we could also see that actually drop down all the way down into our trend line right around this 422 level. So we really have to be on our toes over the next couple weeks as price is starting to constrict and see if we're able to get a break out of this wedge. On the SPY, we're actually seeing that reject as of right now. We're seeing that actually move down here on the MACD. If I spread it out for you, you're seeing how that's actually coming down. That is a rejection at this point, and this could be a lower high. Now, if that does want to fall to lower levels, it wouldn't necessarily be all the buying is done. Everything's done because we do get GDP this week, and that's been pretty good for the market overall. So if they do get that reading and the soft landing is still the narrative, we can actually see that as some good news. It's supposed to come in around 5%, which is almost double from the previous month. So what I want to pay attention to is if we break down, do we actually come and close below this weekly range? Do we actually close below that weekly range, or do we use it as some support? If we do break down maybe tomorrow or Wednesday, if we do start to head to lower levels, maybe we actually use this as support. And if price is able to get all the way back up in here, we can actually see some kind of bullish head and shoulders set up in the near future. So really, I would be paying attention to this weekly range, see if we're able to close below that level, because you'll notice how we've trickled up in this area, so we can cut through that pretty quick. We can head down towards this liquidity way down here. So I do believe that if we come down maybe into this little bundle here, right around that weekly expected move, we actually could see some bearishness come in, and actually that is one last fake out of this year. Even though we're starting out with a down move on that explanation, it's kind of the bullish take, right? It's the bullish take. It looks like we need to consolidate in some way to head higher, and I believe that's the best way to do it. So what we'd pay attention to the bull side is the top side of that weekly expected move. Also, we'd want to keep in mind this 480. So I do believe if we get this kind of setup, we do have a good chance to actually make a new all-time high in the SPY. So I want to pay attention to that. But to give a bearish take here, you'll notice that we do have this left lip over here, and we could have some kind of head and shoulders right along our monthly expected move. So if this actually wants to catch a bid and go a little bit higher, even to the weekly, or even to test the all-time high and then come back into this area, we actually could see this set up here, which is actually going to be a very bearish setup, right? This will be some kind of bull trap. This will be the bounce to tell people, hey, we're going to head to higher levels, and then it's actually going to start to break down. Now, if this pattern up here played out, we would actually land right in this area, and look what that lines up with. We line up really well with the last area we struggled in order to go higher, right? We started to consolidate in this area. We couldn't find a reason to pop, and then we explode higher. That actually would catch you up to here if this pattern played out. So we want to pay attention to both sides, but I believe that one of these two scenarios is going to play out over the next few days. I'm really leaning towards the first one. The Qs are a different story. We're just using that 9 to head higher at this point. That's just some squeezing coming in, and we can squeeze all the way up higher. We noticed this yesterday. We could come up into that trend line up here, which is right around that weekly expected move. So that could happen before, and maybe we actually set up some kind of small divergence here for this to come down. I would really be paying attention if the Qs are able to maybe consolidate sideways and then see another move higher with this MACD crossing. And then to the downside, I'd really pay attention to this little thing here. If we actually close this cup like kind of further out by the end of the week, then we get some kind of handle, it's a good sign that we might head to lower levels next week on light volume, as we do have a shortened trading week, which is something to look out for. Something I wanted to talk about, Apple coming up into its monthly expected move. This is Apple's monthly expected move, and that's exactly where we see that resistance come in, and we're seeing it drop off. So even though the market is trickling up higher right now, the Qs look like they're just squeezing higher. This is not one of those stocks participating. Apple is one of the most popular stocks. It's one of the biggest stocks, and it is not confirming another move higher at this point. And we have to be careful in this, right? We just got to beat down. We could curl back up, and as that MACD is in that positive territory, we can see another push in this move coming to test some trend lines up in this area. So really, if you're looking bullish on this, if we start to get a crossing of that MACD and start to come up, really be paying attention to that weekly expected move that I'm giving you on Patreon, okay? Amazon actually exploded higher, and this is one that I wanted to talk about on the daily. That is just a very, very big move, and we can see that it broke through this consolidation, right? It was struggling to break through this area, struggling to break through, and then once it does, we get a big move. The funny part about this is it goes and touches exactly on its weekly expected move. I put that top side of the weekly expected move up for you, 154.88, and we touched almost right on that. I believe the high of this was 154.85, so you're almost like $1, or actually not even a dollar. You're actually 3 cents away from hitting that. So that's a very, very good thing to pay attention to as we are hitting it early in the week. If you do get some more bullishness, we can come up into this trend line up here. So pay attention to that. For right now, we're seeing that resistance come in right exactly where it should. So that's all that's expected by the options market. And from here, they're really banking on it landing in here 68% of the time. This is a bullish thing. I just wanted to point that out. You're crossing on the MACD. These Bollinger Bands were tight. So this does have the room to go higher at this point, even though we're not even in that overbought territory yet. So we really have to pay attention to it. But on the weekly side of things, pay attention if we fade from this level. This is overall what we talked about last week. If we get excited and we start to push past this level, look if that fades by Friday. It's going to be very telling for Amazon in the near future. Tesla, there was one cool trade that I was looking at. You knew this consolidation was coming if you were paying attention to a 30-minute chart, which I was paying attention to today. So I saw that we were making some divergence up here at these two highs, and I said, hey, this thing needs to pull back. Now notice I'm not saying, hey, this has to fully reverse anything like that, but you can see these divergences here, which just tells you there needs to be some kind of consolidation, some kind of pullback. So if this wanted to break down further, look at this area right in here. Maybe we come down like this and we actually get back into this zone that we broke out of to get this big move. Just to head down and then curl back up, you'll notice that we will be in that positive territory. So if we do see this curl back up, it's most likely that we are going to come test this high or go make a new one at this point. So Tesla has been pretty strong for a couple days now. Very good trade. It came into its weekly down here and then it skyrocketed up. So it's a very good trade to be taking at this point. And now you know with that 30-minute divergence to take some money off the table. Nvidia, we were stating last week how if it does curl, you do have that chance, right? If you do get that green bar on the histogram down here and it crosses on the MACD, you can get that to come test this high or go make a new one. And it looks like we're starting to push higher. So as long as no bad news comes out, this can go make a new high. Wanted to be very clear about that. We've come out of this this flag here. It's kind of a bear-looking flag that we're struggling to close out of. Now we have, so you do have a good chance that that comes up. But as we're seeing a little bit of weakness, we're getting that rejection on the hourly. It might take a little bit more consolidation before that actually happens. That's something to pay attention to, but as of right now, we do get GDP in a couple days, which has been pretty good news for the market. So maybe we do go make a new high in Nvidia soon. So on Nvidia, I am still paying attention to that 2-hour. I'm paying attention to the 2-hour. You notice we kind of on the shorter time frames found a little consolidation, and we popped up to the upside out of that consolidation at this point. We're getting some rejection at the end of the day. Could be some selling off. Really pay attention on the 2-hour to when that actually crosses. And then if that does cross, we actually could see all this as a left head. And if we do want to break down from here, we'd most likely get some kind of bounce in this area and set up a right shoulder. So it's something to pay attention to, even though you are bullish on the daily side of things, which is probably the more important thing to think about, more important thing to keep in the near future, because we are overbought on a lot of different stocks. We are overbought on the overall Qs. So this could have a big pullback, and maybe this is some kind of bull trap. So I'd just be a little cautious in this area at this point and really pay attention to this MACD if it's able to cross. And then what you want to do is just focus on this area. If that's able to burst past here and actually cross back into positive territory on the 2-hour, you might have that other leg higher to go make a new high and come even higher than this one. Yields on the day are making some indecision. Okay, we're getting some indecision at the bottom Bollinger Band here. And overall, this big move down that was bought up by the bond traders, we just want to pay attention to that because that's just stating that something could break in the system and they see these rates needing to be cut very quickly. So as of right now, if they wanted to walk back those statements, right, if the Fed wanted to do some work and walk back those statements, we could actually see this yield pop a little bit higher as we are with this yield where it is. We're pricing in like 150 basis points at this point in cuts next year, which the Fed only said half of that. So it's something to pay attention to, and maybe that actually creeps into the mind of some traders this week, and we see a little pop in these yields. But we could just be consolidating sideways to come into this trend line before that happens. So it's something to pay attention to, but keep your eye on these yields. This is why it's like a little bit cautious, especially even with like trades like Nvidia that have that crossing and things like that. I'm not getting into any of that, but until I see some of these signals go away, right? We have this divergence still forming on the dollar. We're seeing the dollar still get like holding to the top side of this inside trading bar, and we could see that, pop up. So I really want to pay attention if this is able to cross over the next few days, because it could mean some bearishness is coming in, because when the dollar goes up, stocks come down. Last thing we'll talk about today is the VIX, because the VIX actually did close above the 9-day moving average. So this tells you at this point that we could see that pop very, very soon, as look how tight they got, even tighter, these Bollinger Bands. It looks like something bad might be happening very, very, very soon. When they get this tight, you should get worried. When they get even tighter, we should be even more worried, because volatility can come back into this market very quickly when they do get this close together on those Bollinger Bands.